In this World Sociology screencast, we're going to take a look at neoliberalism. And neoliberalism is the second of four theories of development and global inequality that we're going to use as the building blocks for world sociology. A good understanding of each of these theories should allow you to answer most types of exam questions. Now, you might find that the examiner doesn't use the term neoliberalism, and instead when you open up your exam paper you might find reference to the New Right approach. And don't worry about this at all. For our purposes the terms neoliberalism and the New Right are interchangeable. Basically this term, the New Right, was used to describe the conservative governments in the UK and America in the 1980s that were influenced by the neoliberal perspective. And neoliberalism, I think, is one of the most important perspectives in world sociology, because since that period the IMF and the World Bank have pretty much adopted a kind of neoliberal stance to development. Now, I think there are two main things to emphasise about the neoliberal approach to development and global inequalities. Firstly, they're very critical of the aid-based approaches that we would associate with a perspective like modernisation theory. And secondly, they're very enthusiastic about the potential of free trade to stimulate economic development. So in a nutshell, neoliberalism is a perspective that argues in trade rather than aid. And two public intellectuals that adopt a neoliberal perspective on aid are Dambisa Moyo in her book Dead Aid, and then Bill Easterly in his famous book The White Man's Burden. And both of these writers are not convinced that aid has actually helped economic development in poorer countries. And both Moyo and Easterly argue that a lot of foreign aid is misused, and that the net effect of international aid to poorer countries is often very harmful, because they argue that it undermines things like good governance and free markets. For example, another neoliberal thinker, Peter Bauer, argues that aid has actually exacerbated some of the problems that lead to underdevelopment in poorer countries. So he argues that aid makes things like corruption and economic mismanagement worse rather than better, because he argues that international aid is often used to prop up either corrupt governments or inefficient businesses. So neoliberalism is obviously very critical of the modernisation theory argument that aid is necessary to break the cycle of poverty in poorer countries. And instead of emphasising the importance of aid, neoliberalism places much more emphasis on governments adopting the right types of economic policies characterised by their belief in free trade. So neoliberals argue that if developing countries, what we sometimes call the majority world, increase their share of international trade, this would be far more effective than international aid. This would generate a lot more income for those countries. And neoliberals would point particularly to the success of some of the Asian countries that have seen rapid economic development as a consequence of increasing their share of international trade. And neoliberals believe that the best possible way for poorer countries to increase their share of international trade is to end economic protectionism and to adopt a free trade approach. And in a free trade approach, local companies and foreign companies are treated the same. So this involves a process of trade liberalisation where governments are encouraged to remove trade barriers that inhibit trade across borders. So in this slide we see the contrast between economic protectionism on the one hand and trade liberalisation on the other. So economic protectionism involves national governments trying to protect domestic producers, trying to protect the businesses and industries that reside within that country. And that might take the form of the government giving money to local businesses, and that's called a subsidy, or it might take the form of imposing import tariffs on foreign goods coming into that country. An import tariff is a tax that is put on foreign imports, and the effect of that is to make the foreign good more expensive than the goods that are produced within that country. Now, the reason that neoliberals think that economic protectionism isn't actually a good economic policy is this idea that it insulates national producers from competition, and it's competition that helps to make businesses much more dynamic and much more competitive. So they would argue that things like subsidies and tariffs prop up inefficient national industries that would get stronger and better if they were put into a more competitive environment. And therefore neoliberals believe in a free trade approach characterised by a move towards trade liberalisation, where governments increasingly treat local and foreign producers the same, and this obviously involves the reduction or elimination of trade barriers like subsidies and tariffs. And also they argue that the best possible way of managing the economy is for the state to do as little as possible, really, to reduce things like red tape, rules, regulations and taxes that might inhibit entrepreneurs and might act as barriers to trade. So, very quick recap of neoliberalism. So this is an approach that emphasises the importance of trade rather than aid. The focus is on the internal barriers to development, particularly things like corruption and economic mismanagement, that this perspective argues are made worse by foreign aid. And they believe in a free trade approach, and this entails a process of trade liberalisation rather than economic protectionism. And they also believe in a kind of light touch approach to managing the economy in terms of taxes, in terms of regulations. So that's this idea that the state that does least is best. Now, one of the reasons that neoliberalism is such an important perspective is this really has been the dominant influence on the Bretton Woods institutions, and neoliberal policies have often been prescribed and implemented via structural adjustment plans. So structural adjustment programs, or SAPs, are sets of conditions attached to IMF World Bank loans which oblige nations to take a number of actions that are consistent with the neoliberal perspective. So these conditions might state that governments have to cut back on subsidies, get rid of import tariffs, deregulate their economy and reduce the tax burden by privatising public services. And in practice, the effects of this structural adjustment are often very controversial and very unpopular, particularly with the poor, who bear the brunt of structural adjustment. For example, when public services are privatised, often the cost to ordinary people increases significantly. So things like the privatisation of water that we've seen in many poorer countries, including, in this example, Bolivia, very unpopular with the poor. And when Bolivia's water supply was privatised and owned by a Californian company called Bechtel, even rainwater became the private property of that Californian company. And the SAPs have gained such a bad reputation that the World Bank has now replaced them with poverty reduction strategy papers. However, critics argue that this is simply a rebranding exercise. And if you've been following the news at all, you'll be aware that structural adjustment is not just being experienced by developing countries in Africa, Asia and Latin America. You've now got countries in Europe that are effectively bankrupt, that are being bailed out by the IMF and are having to undergo their own structural adjustment. So let's finish this presentation by doing a brief evaluation of neoliberalism. I think one of the key strengths of this perspective has been the contribution of figures like Bill Easterly to the debate about international aid. And I think it's undoubtedly the case that the criticisms that writers like Easterly have made of international aid have actually helped to make aid more transparent, more accountable than was the case in the past. However, there are many writers who are very critical of the economic prescriptions of this particular perspective. So writers such as Haji and Chang argue that there's a real hypocrisy at the heart of neoliberalism because it's a case of do as I say, not as I did. And what he means by this is those countries such as America that are at the forefront of pushing the neoliberal agenda did not develop according to the neoliberal prescription. So if we look at the guy that's on the $10 note, Alexander Hamilton, who was the first ever Treasury Secretary, Hamilton argued that industries in their infancy, like the American ones in the late 1700s, needed to be protected and nurtured by the government before they could stand on their own feet. He also argued for massive public investment in infrastructure. And given his views, Haji and Chang argues that were Hamilton a finance minister of a developing country today, his country might be refused a loan from the IMF or the World Bank. And on the back of the $5 note, we've got one of the most famous American presidents ever, Abraham Lincoln, and Lincoln raised tariffs to their highest level ever. And he famously once remarked that within 200 years, when America has gotten out of protection all that it can offer, it too will then adopt free trade. On the back of the $20 note, we've got another president, Andrew Jackson, and again, during Jackson's presidency, tariffs on imported goods were very, very high, in the region of 35 to 40%. So these important figures from American history realised that economic protectionism was good rather than bad. And Haji and Chang argues that the reason that economic protectionism is a good thing is the same reason why we send our children to school rather than making them compete with adults in the labour market. That poorer countries need to protect and nurture their producers before they acquire the capabilities to compete in the world market unassisted. So Haji and Chang argues that contrary to what is commonly believed, if we look at the performance of developing regions of the world, it was markedly higher in the period of state-led development and economic protectionism than it's been during the subsequent period of structural adjustment and free market policies. And Chang argues that those regions of the world that have been the most successful in increasing their share of international trade, including the so-called Asian tiger economies, did so with very high industrial tariffs. Other left-wing critics of neoliberalism, such as Noam Chomsky, argue that the free market doctrine is selectively applied. So, for example, whilst there's pressure on poorer countries to remove trade barriers, rich countries, particularly in the field of agriculture, continue to give very generous subsidies to their own producers.